Hey everybody, Brian Pezim Traders here. It is the weekend, September 29th. Hope everybody's having a good weekend. And this, of course, is the weekend video. We'll take a look at what happened last week in the markets, just a quick review. And then we'll look ahead and see what we got coming up this week. So without further ado, let's get down to it. Okay, so as we always do, let's start out by taking a look at what happened last week. September, historically, one of the worst months of the year for stocks. That's just based on averages. But this certainly wasn't the case in 2024. We had a pretty decent week. PCE price index data released Friday showed inflation continued to be under control and moderating. And of course, that bolstered the Fed decision to cut the 0.5 that they did in the previous week, and maybe further cuts ahead coming as we get into October for the next meeting. However, the longer-term Treasury yields had risen significantly over this week. Possible concern about a reignition of growth with the rate cuts, so we'll see where that goes. But the yield curve continues to normalize with longer-term yields higher than the shorter term. As far as the indexes go, we finished it up all on the week. You can see there. Surprisingly, the IWM didn't do better because usually when we get a drop in yields and potential for more, usually the small caps do better because they are dependent on short-term borrowing. So not much of a move there on IWM. We'll take a look at that chart in a minute. Of course, the materials and consumer discretionary, they were the biggest gainers on the week with the economy still chugging along. Energy continues to be the laggard, and it is the laggard for the year. And the healthcare sector lost some momentum this week as well. So you can see here, not much movement on the 2-year Treasury, but 10-year was up significantly, and that's a pretty big move for Treasury yields. Dollar down slightly this week, not much of a move there. And Bitcoin continues to rally here. We'll take a look at that chart as well. So that was your week in review. And before we proceed on to look at some charts here, I always like to throw in a quick plug for my books that are available on Amazon. All the formats, whether you like e-reader, audio, or just getting a hard copy, they're available. How to Swing Trade, my first book, very popular. Profiting as an Active Trader, also a swing trade book, but much more in-depth. And finally, my latest book, How to Trade Options. If you're interested in options, and I know a lot of people are, you can check that one out as well, all rated very highly on Amazon. So let's get down and look at some charts now. All right, so let's go over some charts and the indexes and see where we sit right now. This is the TLT reflection of the yields on a long-term time frame here, and you can see, as I mentioned in my intro, the long-term yields have really gone up a lot, and of course, this is the price of the treasuries. So as yields go up, the price of the treasury goes down. So I'm hoping there's a little bit of a bottom here. I'm still holding some various bond indexes because we had a really nice run up over the last couple months here through the summer. I picked them up, and as I expected, the Fed would start easing, which meant bond prices would go up. So this little pullback here, again, concerns about possible reignition of growth as the Fed continues to cut rates. So hopefully we're bottoming out there. The short terms really haven't been affected too much, like the 2-year, as I mentioned. So the dollar's kind of hanging in here in a sort of a trading range right now. It's down a bit because yields have been dropping, but it's probably going to hold in this range here. So let's get into the indexes. Let's talk about the Qs. Again, the Qs have really been struggling to get back up to this high, unlike the Dow and the SPY. And we had a kind of an interesting, I would say, week and a bit here. You can kind of see we jumped up based on the half-point cut that we got. And then we kind of traded in balance here for about 4 days. There was some balance. And then we broke out on Thursday and kind of filled this gap here, but failed immediately and sort of came back down into this trading range here. And you're going to see that on I think the SPY as well. So it kind of makes me, again, I'm a little bit concerned about where we're going right now. I'm not looking for a huge sell-off. I'm looking for a little bit more volatility as we get close to the election. I think there'll be some volatility in the market, and you'll see that in one of the positions I've got on. I've just started this week, or last week, I should say. But you can see here there's a little bit of, I would say, there's not a lot of enthusiastic buyers, and there don't seem to be enthusiastic sellers either. But I'd be watching what we're going to do next week. But I kind of feel like we're kind of in a range here. So you can see same thing happened with the SPY. We gapped up after the announcement, the Fed announcement, tried to break out of this range and then pulled back into it. So sort of a false breakout there, but moving average is still trending up. I mean, we still are in an uptrend, but I kind of feel like we might be just stalling out here for the time being. On the Dow, we made a fresh high this week. It's, I think I said, the 34th new high this year. And you can see here we're still holding these moving averages. We are sort of trading in a sort of a balanced range. We did try to poke our head above there, but it wasn't a big move. And so I'm not sure where if we have the sort of buying power to really push this market higher. The Dow. Let's take a look at the IWM. Again, IWM surged on that initial announcement about the half cut point, and then and now we pulled back ever since, and we're back down into a sort of trading range that we've been in before. So IWM, pretty sort of, I would say, disappointing price action. I would like to have seen it. This is again where we sort of found some balance before we broke down here. Really just this level seemed to be a point of significant resistance again on the IWM, right up around 225, 224.5, and pulled back again. So again, I'm not looking for a failure of these moving averages, although I'd watch that, but it does seem like we're back into sort of a trading range here on IWM. And things may smooth out and kind of just consolidate as we get closer to the election, and people kind of wait for the outcome of that as well. Bitcoin, to me, Bitcoin looks like it's on the verge of kind of breaking out here. It has been pretty significantly, the price action has been pretty significantly tied to the action in the Qs as well, sort of the risk-on trade. But it did make a new high here. This was a prior high, and it broke out pretty convincingly above there. So if we can get up, this will be your next hurdle, about 68,000. And then, of course, this double top that goes back to June, the 71,000 level where we really topped out again. So watching maybe for if it can pull back a bit, maybe might nibble at that as well. So that's kind of the indexes as I see it now. So stocks that I'm currently holding. So this is a new position this week. I picked up some UVXY. This is the volatility index. You can see what happened back in August when we really had that sort of mini crash in the market where we did a V reversal and came right back up again. But again, I kind of saw it bottoming along here, and then Friday we really started to make a move up. And what caught my eye on this one particularly was Friday we went out near the highs of the day, and that's sort of unusual for the VIX. Usually going into a weekend, volatility usually drops off, but volatility seemed to really start to pick up here. So I'm going to see what happens, but I think this is going to pick up even more as we get closer to the election. And so I am going to probably be holding on to this position, and we'll see what it does on Monday. But if we get a gap up to and a move up to around 30, obviously I will take some profits on that. But in the meantime, I think we've got a little bit more room to run here. And as I said, it could be a month or two hold if things work out. But there's my stop out level right around 23, somewhere in that area. So that's a new position. CMG, I'm still holding on here. I still think it's got room to run. We just got to get through this sort of 58 level, which seems to be resistance right now. Again, we kind of seem to be in a balanced sort of price range here. A lot of volume been moved back and forth here with people. I'm a little bit concerned that we lost this moving average on Friday, so keep an eye on that one. PLTR, this was a position I had, and I have since exited the rest of my position after we got this really nice run up. So I am sort of done with PLTR. And again, we seem to be kind of chopping in a range here, which is sort of the theme that I've been talking about with the indexes as well here. So that's it for current positions. So things I'm going to be watching next week. This will start off with the FXI. This is the large cap Chinese index. It's a ETF. And you can see here, obviously, when the Chinese came out with a bunch of announcements about stimulus, it really took off here. I think it's quite extended. And if I look at this on a monthly basis, see if we can pull up the monthly here. You can see we're into an area where there's been prior resistance, both way back here, and when we dropped, we dropped and found some support here, dropped down, came back up, found resistance. So we're back at resistance. So I'm thinking it could be a possible short. I still don't think that the Chinese have resolved their real estate situation, so that's why I'm looking at this as a potential short. As far as silver goes, it's kind of the same thing. Silver never fails to disappoint, and you can see here it's right at the top of its range. Resistance, double top here. Tried to come back up and challenge that top, failed again, and I think it's going to fail again here. So potential short on silver. Crowd, I still think it has some potential to move up here. It's still got this big gap to fill here, big open area. So I think if we can break above, I'm watching this, certainly going to watch above this 300 level. If we can get above there, that will be interesting. Netflix, another one that's kind of interesting here. We traded in a range here for quite some time. Broke out. I said I was watching this 700 level. I haven't traded it, even though I've been watching it, but it has pulled back, and it may be just checking back before it starts to rally again here. So I'd be watching for a check back to around 700, and then maybe a rally as it goes through 720 and could potentially move higher. So those are the stocks that currently I'm going to be watching for next week. But as I said before, I'm a little bit concerned where we may be getting into a non-convicted trading range here for a while on a lot of the indexes, which will sort of put a damper on any kind of trend on some stocks. So that's it for potentials for next week. All right, so let's just wrap things up here, put a bow on it. September 30th, this is the last trading day of the third quarter. So it could be a little interesting here, but that's the levels you want to watch. Support and resistance on the various indexes, SPY, Q, and IWM. And as far as economic events go that we're going to focus on here, there is some manufacturing and economic data. The big numbers that people are going to be watching here this week is how employment is holding up. We've got the ADP employment report on Wednesday, and the big payroll, unemployment, and wage data that comes out on Friday. So that, of course, will be in focus because the Fed is keeping a very close eye on the employment situation. As far as earnings go, you can see we don't have a lot. We've got CCL before the market opens. I think it actually announces just before the market opens, like about 15 minutes before the market opens. So that could be some interesting trading as we go into the open on Monday. We've got Nike. That'll be an interesting one after the market closes Tuesday. Levi, another obviously consumer item on Wednesday. So that's it, everybody. Hope you have a good rest of your weekend, and we will see you hopefully in the room, or if you want to join us on YouTube, 8 o'clock live on YouTube as well for people that want to watch there. So take care, and we'll hopefully see you Monday. Bye for now.